South Africa's retail sector is showing signs of recovery. This is according to the latest State of the Retail Nation report by NielsenIQ, one of the country's biggest market researchers. According to their latest report, South Africans spent 519 billion rands in the past year. This is a 13% increase in retail spending year on year. The retail sector contributes almost 14% to South Africa's GDP and remains a massive employer of nearly 1 million people. Jon-Jon Emary at NielsenIQ joins us now to tell us what the latest surge in retail means for you and I and the latest trends. Thank you very much for joining us, Jon-Jon. This report takes into account the data from over 150,000 branded stores and independent outlets. Is the higher spending as a result of inflation or people generally spending more?
Evening. Thanks for having us this evening. So it's a bit of a twofold factor that we're seeing. There's definitely a drive from inflation, and if you look at things like cooking oil, there's significant inflation in those categories. However, what we are very conscious of and very aware of is that we're seeing a shift out of home spending. So people aren't in restaurants and going out as much, and there's definitely not as much travel as there was pre-COVID-19 and hard lockdowns. So we're seeing more in-home spend and a conscious strategic move and tactical move from shoppers to spread their rands and cents. But having said that, we can definitely see that inflation driver coming through across multiple categories. We also know that there's still some stimulation coming through from liquor and tobacco, which saw unprecedented bans during 2020 and even up until Jan 2021, seeing still bans. And if we look at the tavern space, only up until December last year were all the restrictions moved where we had curfews in place. So there's multiple factors driving that growth, but the two biggest ones, definitely inflation, as well as that focus on in-home spending to really make our rands and cents spread a little bit further than they were before.
And according to your report, trends are showing that consumers have reverted to non-branded independent stores, spaza shops and mom-and-pop shops in the past year. Is this due to the inflationary pressures that we are seeing of late?
What it appears to be is a move back to some level of pre-COVID shopping patterns. So we know that shoppers are consciously reducing the number of retail outlets that they go to. They're shopping more and more on promotion. They are searching for those deals. However, on the flip side of that, there is still an element of convenience required for some of those smaller top-ups. We're looking like out-of-home bread consumption during the workday, easier to get at a local spaza than having to get to a shop to buy it, and things like tobacco and alcohol stimulating quite a lot of growth in the traditional trade sector.
And of course, your report says that we have spent more money buying bread, and inflation has been seen with the oil price of cooking oil up by 38%. But you also speak about the fuel price. We are expecting it to rise again. Food inflation will continue to rise. What items have seen the rise of that inflation, and what should consumers or can consumers do to actually counter or cushion themselves towards this inflation?
So yes, 100%. We definitely see that cooking oil inflation leading the pack, if we want to put it as a race here. We know that those factors are coming off the back of the war in Ukraine and export bans around the world. What we can see is inflation in the high 30s, but value sales only growing at 43% in relation. So we know people are paying significantly more per bottle of cooking oil, but we're not selling loads more cooking oil into homes, which speaks to a little bit less stockpiling than we're seeing in other parts of the world. We know frozen chicken seeing inflation around 16% and laundry detergents at 11%. Those are the three biggest inflationary categories at the moment. What we do know, if we look at the Stats SA indicators, we can see that CPI and PPI are significantly far apart, with PPI around 13% and CPI only at 5.9% last month, which really shows how much money is being invested into keeping prices low for consumers by both the retailers as well as the manufacturers. We see this. Shoppers are very smart. They're buying a lot of private label to look for more affordable alternatives. And we also know that 35% of the volume sold of the top 50 categories in South Africa is sold on promotion. So shoppers are very smart. They're very aware of of the tactics that they need to use to reduce their spend and spread their rands and cents. And we'll continue to see these factors coming into play. And in fact, South Africa is one of the most price-sensitive markets that we measure around the world. And it really speaks to how conscious our shoppers are to the effect on their wallets.
Jon-Jon Emary is the lead researcher at NielsenIQ, and he was speaking to us about the retail sector and their own research showing that we are actually spending more when it comes to the retail sector, 13% up from the previous year. Thank you very much there, Jon-Jon, for your time.